Welcome to the Property Pulse podcast. Today we're joined by Joseph Daoud, the founder of It's Simple Finance and a true leader in the mortgage and finance industry. With a background in economics and mathematics, Joseph really brings a sharp analytical edge to everything he does, combining data-driven insights with real-world financial strategy. His expertise spans residential mortgages, debt reconciliation, refinancing, and helping clients grow their property portfolios through tailored lending options. Beyond his professional success, Joseph is known for his innovative thinking, strong leadership, and genuine passion for helping others achieve financial freedom. Whether you're a first-home buyer or an experienced investor, this episode is packed with valuable advice, so let's jump right in.
Welcome to the Property Pulse podcast, your prime source for Southeast Queensland real estate insights. Understand the latest property data in Queensland to grow your net worth, as Geoff Tomkins interviews industry experts to give you the latest market updates.
Hi everyone, and welcome back to another episode of the Property Pulse podcast. I'm Geoff Tomkins, your host and founder of GCT Property, here to guide you through the ever-changing world of real estate in Southeast Queensland and beyond. Today, I'm honoured to be joined by Joseph Daoud, founder of It's Simple Finance, industry leader finance specialist based in Sydney, known for helping Australians simplify their finances and build property portfolios with smart, strategic lending. Welcome along, Joseph.
Industry leader. Oh, that's a very big compliment to receive on a Monday afternoon. Thank you so much for having me on, Jeff. Thank you.
You're welcome. Now, just before we get underway with the interesting part of the conversation, just a quick disclaimer there. Of course, we don't understand your individual, financial position, so please, take this as generic advice and seek professional advice before investing in property.
I definitely agree with that. Always make sure you consult with your professionals, especially for your specific situation.
Great. So, leading into our conversation, Joseph, please explain a little bit about your starting journey in the industry and your history, where you've come from and where you are now. It'd be really interesting to find out the story.
I've got a very unconventional way that I got into finance, like most people do when they become mortgage brokers. But I feel like mine's it was supposed to go that way, but it's swayed off the path. Let me explain why. I left high school and I was 131 kilos. Okay, so I
Wow.
was a very large person.
Wow.
And, went on an overseas trip, came back, got a good diet and everything, and I dropped like 50 kilos, right?
Wow.
So did a massive body transformation and I became a personal trainer. And when I was a personal trainer, I started to realize that if I'm not there on the ground, I'm not making money. It was a very conscious choice when I decided to sell that business and go back to university.
Wow.
Now, when I went back to university, uh, I just chose two very generic things that I was good at school. I chose economics and maths, and that was it. Okay, so my degree is literally a Bachelor of Arts, major in economics with a second major in mathematics. And what ended up happening was I finished my degree and I started applying for jobs. But little did I know, everybody wants a postgrad diploma in finance or another diploma in this or a certificate in this. And I didn't have any of this because economics and maths, it's just very generic. It's okay. Do you want to be an economist? Do you just want to look at spreadsheets all day? Is that what you want to do, Jay? And I was like, well, not really. I like talking to people. Um, so I approached a recruiter and she started getting my resume out there. And I was having interviews with Lendy, Westpac, St. George, CBA. And I just remember Macquarie Bank calling up and saying, hey, are you interested in a position? We got your resume from this recruiter. I
Wow.
didn't even know what the job was for. I had no idea. Okay, it just said senior banking specialist. I was like, I'm going to be a data analyst. I'm going to be a private equity because I'm so excited about Macquarie Bank. Little did I know, they were putting me in the home loans team. So I started in Macquarie. They put me in the sales desk. They go, yep, this is your servicing calculator. This is your credit policy. And, just by chance, it was the best thing that happened to me because it led me to my career. I
Wow.
didn't know that I would love home loans so much. I didn't know that I would enjoy being a broker so much. But here I am 7 or 8 years later. And whilst I said it was unconventional, I believe it's unconventional because nobody goes for a job and doesn't know what they're applying for. But, it was a lot of fun and I absolutely love helping people. So being able to help mum and dads or being able to help anyone between the age of, 29 to 45, sometimes younger, sometimes older, really turn their money into something tangible. That's the beauty of what we do.
Yeah, I tend to agree, mate. Like helping people into property, first home buyers, when you see them going for the rental ladder and they're very nervous and not sure how the process works, especially with new construction, just adds another
Hmm.
level of complexity to it. And see the outcome, see they're getting through their property and they've made equity and growth and they're off the rental ladder and they're investing in their own, asset. It's a very rewarding career, what we do, and same with investors, helping our clients create wealth and more, rental accommodation. We're in a rental crisis here in Australia.
Hmm.
I think, it is pretty exciting industry as well because things, as you know, finance, I know rules are changing all the time. It's a never
Hmm.
evolving sort of platform, isn't it?
Yeah. CBA has recently come out with a new policy where if your HEX is going to be paid off within the next 2 to 5 years, they will reduce your buffer rate. So for the listeners, the buffer rate is the interest that the bank adds on top of the nominal rate that they're advertising. So let's say you're going for a home loan and the bank has offered you 5.75%. Unfortunately, your repayments aren't calculated at 5.75, they're calculated at 8.75, just in case the Reserve Bank of Australia decides to go berserk again, like they did in 22 all the way to
Right.
24.
Right.
So what CBA has done, they've actually dropped that buffer rate to 1% if you're paying off your HEX between 2 to 5 years. So they're really helping those first home buyers, those investors get into the market and get into the market sooner. We're now seeing more 25, 26, 27 year olds approach us to get a loan as opposed to what we did 6 months ago.
That's amazing. Just 2 days ago, I met with a lovely family, and they've got several properties, and they're helping their children into the property ladder. First home buyers, brother and sister, and the brother had a HEX deck, and exactly that. My concern was, hey, how is this going to affect? Not on super high incomes. That's amazing and timing sometimes, and I guess that's the benefit of having you as a finance specialist and up to date with all these new policies. That could
Mhm.
be the difference between getting a loan approval and waiting 12 months and paying a lot more for the property. So that's good to hear. That's good to hear.
If they haven't spoken to a broker yet, Jeff, mate.
Oh, of course, 100%. Great conversation.
Yeah.
That's another good thing. I mean, you learn new information every day of the week. So and they might have been to a bank or a lender that said no. Now you've got a potential solution that could increase their borrowing capacity.
Can,
Awesome.
can, can sorry, I know you're interviewing me, but I do have a question to ask you. Do you feel like you're working when you're doing what you do?
I actually have a passion for property. I started property young. I used to buy and sell, renovate, develop property. I still get excited going out and looking at clients' investment properties. I'm investing myself or home buyers. I
Mhm.
do love it because I work a lot of long, 6 days a week, basically, a lot of hours. But I still love property. Yeah, honestly.
So it's not work for us. That's the thing. When you actually love the passion, when you actually love being able to help people, I could have somebody that needs a $150,000 mortgage, something small, or I could have somebody that needs a $1.5 million mortgage or a $2 million mortgage. I'm not going to say the big numbers, but
Yeah.
something like that. And I still get the same thrill of when they're approved, when they settle, when we're able to hand them that set of keys, because it is the most rewarding experience seeing people be able to grow their wealth. And my wife often asks me, and God bless her, I love her with all my heart. She's a doctor, so different industry.
Right.
But with her, what happens is she's like, "Don't you get tired of work?" And I'm like, "But this isn't work for us. It's fun. We get to help people." So
Yeah.
I don't know. Maybe I'm doing too much of a sales pitch here, but I love what we do.
No, I tend to agree. My partner, she's a nurse,
Yep.
and she says the same thing. You work a lot of hours, and
Yep.
how do you keep going and keep that energy and keep inspired and everything like that? This pretty much the same answer, like very similar sort of story. So interesting. So
Yep.
now getting on to the next topic. I know you're based in Sydney, and you probably deal with, I'm sure, a lot of Sydney home buyers and
Mhm.
investors. And obviously because the city market's becoming more and more expensive, and the price now is the medium house price is crazy. Are you seeing the investors looking outside of the local area now that that market is?
Definitely. So there's something called the $1 million ring. Okay, the $1 million ring in Melbourne, for example, is within 20-minute radius of the
Right.
CBD. I think Sydney is literally from Bondi to Penrith now. If you're looking to buy just a house on a block of land, you are paying upwards of $1 million.
Right.
I'm thinking of areas like St. Mary's, like Campbelltown, like Mount Druitt, all these areas which used to be considered less desirable. There was a mansion that sold in Mount Druitt, I think it was about a month ago, for $2.3 million.
Wow.
Now, Jeff, I've been in the property game since I was 24, so for the last decade. I remember when houses in Mount Druitt were $325,000. I still remember seeing that.
Wow.
I still have parents approaching me being like, "Oh, can't my son just buy in Mount Druitt?" And I literally turn my monitor screen around and I go, "Where? Where can they buy in Mount Druitt? Because it has become so expensive here." And the truth of the matter is, it's because you have Victoria that has recently introduced their new land tax
Mm.
with a large amount of people actually exiting the state because they're not favoring entrepreneurs anymore. So what we're seeing, the pattern that we're seeing is a lot of people are now starting to invest in the southeast Queensland pocket because you're close to Byron Bay.
Yep.
Okay, you're not too far from the Gold Coast.
Yeah.
Okay, you're close to Brisbane. It's great weather year round. Like, how many jackets do you own, Jeff?
Not too many. Not too
One
many.
or
I
two?
mean, I think it's winter here, and I'm not sure. It's probably about 25 or 26 degrees outside on the Gold Coast today. So pretty.
So why would you trade that to go somewhere where you'd make less money and with less desirable weather? So we're seeing a lot of people not only invest in, pockets of Queensland, but actually move there. And that's the beauty of it. With the movement moving up there, when you have a lot of owner-occupied individuals in one area, they take care of the area. It's not like other pockets where you just see investors, investors, investors. You
Yeah.
see communities build up. You see, yep, that's our local doctor now because they've been here for so long. So we're seeing a lot of that happen in Brisbane, especially with the Olympics coming up as well. Everyone's raving about that too.
Yes.
Yeah. So, just seeing some very interesting things, especially on the investor side of the market. A lot of our buyers are buying up there now.
Great. Yeah, we're seeing huge population growth, like you just mentioned, Melbourne, Sydney, international migration coming into the greater Brisbane region, which is southeast
Mm.
Queensland, just truly phenomenal. Now, the other good
Can I?
news is interest rates. We've seen, there was a lot of talk a few years ago when interest rates were at 2%, jumped to 6%, but now they're pretty much stabilised. We've had a couple of drops this year, which is great. Have you seen more inquiries or confidence from people looking for loans since interest rates have stabilised? Has that had an effect?
Am I allowed to say something controversial?
Yeah, sure, sure.
I didn't agree with the last rate cut.
Yeah,
And the reason I didn't agree with it is because they haven't approved more property dwellings.
right.
So what we're seeing is property prices just go up and up and up because more people can enter the market. And the people that could borrow, let's say 500K last week, well, they could borrow $525,000 now.
That's right.
So we are seeing a lot more confidence. We're seeing a lot more people contact us and say, "Hey, we want to get in the property market. We want to get in fast." Very different to a year ago. A year ago, we had a lot of refinance, tap into some equity, drop the interest rate, look for different methods in order to be able to help people service. Because when the interest rates were 6.5%, the buffer rate was 9.5%. It was so difficult to get people to service. So the banks started coming out with all these weird and nifty policies. Now, people aren't worried about saving money. They're worrying about the growth because they know they're not approving enough dwellings. They know we have massive amounts of migration and they know that people need housing.
Yep.
And it's like it's the perfect storm of, a housing market going up. So when you say, "Oh, like, have I seen more interest in the interest rates being cut?" Yes, I definitely have, but I am worried about it because of the amount of phone calls I got last week. I think there was one day last week. There was one day last week. I've got the strangest inquiries. It was someone wanting to buy at an auction, but they don't have a job. someone wanting to do like it was just the strangest stuff, and I'm like, were these people interested in property beforehand, or is this now just because the hype's coming back? You know?
Yeah, I think it's a combination. We're seeing. I just did a an update on a suburb in on the Gold Coast called Upper Coomera, so Northern Gold Coast, last
Yeah.
week for a couple of home buyers we helped getting into the suburb, and that suburb has grown in the last 4 months by $50,000. So that means it's that suburb, the medium house price is increasing 2,700 every week. Joseph, that's insane, isn't it?
That's $114,000 in a year, something like
Yep,
that.
yep, yep.
That's nuts.
That's nuts. So,
Yeah.
so I agree with you. We're getting more inquiries.
That's more. It's like sorry, I just calculated it's like $137,000. Yeah, $137,000 in a year, which is astronomical. Like 10 years ago, we couldn't dream of, oh yeah, here we go. We're going to go buy a $800,000 property, which is going to be worth 950 a year later. Like maybe if you bought in certain pockets, but this is nuts, man. This is insane.
Yeah, and in all suburbs across southeast Queensland, we're seeing this sort of growth of around that 60 to 150,000 in the first 12 months, which is and that's why people are. I think you're getting so many for phone calls. People are inquiring about property because they know the sensible ones know the longer they wait, the more they're going to pay for that house, or unit or investment
Mhm.
property. So
The
and
other thing that the Queensland government's introduced is the new stamp duty laws.
yeah.
And that's definitely had a massive effect on, the housing market booming up there. You got Melbourne introducing more tax, and then you got Queensland saying, "No, here, take the property. Let's make this place boom."
Yeah, and we're seeing that, and we're seeing land developers down in Melbourne now offer incentives to try and sell the land because there's less buyers around. Whereas
Hmm.
up here in Brisbane, the Greater Brisbane region now, if you wait a week or 2 weeks for the next land release, you're paying another 10 or 15 or 20,000 for that same block of land. It's just
That's crazy.
it is crazy, but it is
But
that's the market.
I wouldn't even say it's the market. It's demographics. It's where people want to live. You got space, beach. What more could you ask for?
Exactly. Yeah. And with you touched on a previous topic about lenders and different policies, which is great to see. And that's the real benefits. One of the real benefits of a finance specialist. Are you seeing more competition within the lenders and offering incentives or more flexibility with borrowing capacities? Are you seeing a shift there with more competition, Joseph?
We're definitely seeing a shift. Everyone's trying to compete at a different level.
Right.
Um, we spoke earlier about CBA introducing that hex debt policy where if you have a hex debt that you're paying off in the next 2 to 5 years, they'll allow you to only have a 1% buffer, not a 3% buffer.
Right.
NAB has come out with a similar policy just last week.
Wow.
AMP has a great self-employed policy. So if you're a self-employed individual and you only want to use 1 year's tax returns, they will literally just go off the tax returns. They won't even look at certain financials because they understand that no, these are the tax returns. This is the profit. Why am I double dipping and double counting the liabilities again?
Right.
So you're seeing each lender go into their own niche and discover their own risk profile. And I think the most exciting thing is people have a lot more choice than what they did about 4 or 5 years ago. 4 or 5 years ago, there was a lot more black and white. It was not, this is our policy, that's it. We'll call you back in 6 weeks if we want to approve you or not. Now, because the housing market is so hot, especially in Australia, we're seeing the banks heavily invest in improving their credit policies, improving their customer service times, improving their SLAs. We submitted a loan, and I just want to tell you this. So
Sure.
I've got two stories. Okay. Cardiologist went to the hospital broker. Okay, so the hospital has their own broker. I had no idea this was a thing.
Oh, right. Right.
And she got maximum borrowing capacity of like 600 or something thousand, right? Which is a good amount, but I know this person and I know their income. I was like, no, that doesn't sound right. I recalculated her income. I'm like, hey, you can borrow about 1.2. That's like,
Wow.
it was a 47% difference, right?
Wow.
We submitted the loan into Westpac. I'm talking from submission to formal approval. It was 3 hours and 39 minutes.
Wow. That is an incredible story. Fantastic result.
And then 3 weeks later, it got beaten by NAB, 58 minutes. We
Wow.
have never seen the banks operate at this sort of speed. And are they implementing artificial intelligence, or are they improving their staff morale or something? I don't know. But all I know is we have customers that are happier now, which is the result we all want.
100%. And that's sort of leading into the next question, which I think we've already covered in some detail, but please expand on it. So, why we should not go, directly to a lender, the benefits of using a mortgage specialist. I recommend to all my clients, myself personally, always use a finance specialist for some of those reasons you've, just touched on. So I think which is great. Please expand on the other benefits of using a finance specialist as well.
So I have a saying, okay? A lot of buyers agents or real estate agents would often say diversify your property portfolio. I
Yeah.
say diversify your lender portfolio. You need to have different lenders for different things. Okay. If you're planning to purchase in a trust, or if you're planning to purchase in your self-managed super fund, you might not want to approach the big four because they might not offer the product. They might not be favorable to that type of loan. They might count liabilities from external things that aren't operating in the trust. So you might not be able to acquire the property that you want. But unfortunately, a lot of the other lenders, they don't have branches. So you might be a borrower and you might go, okay, you know what? Oh, that's a really good deal. I need to diversify my lender portfolio. I'm going to go see Latrobe. Where's the Latrobe branch? Where is there a Bank West branch on the eastern seaboard of Australia? There is none anymore.
Uh,
Okay. They've all been taken out. They've all been moved to WA again, and it's a digital bank on this side of Australia now, even though they're still owned by CBA. So when you are using a broker, you're still using name brands. We're not taking you to brands that you've never heard of. We're taking you to the name brands, but we're helping you access the certain policies and make sure we can maximize your borrowing capacity. Now, we're always going to have the contrarian saying, oh, but I don't want to maximize this, or I want to go and do that. Oh, no, everyone should think minimalistic. Okay, well, unfortunately, we live in Australian society that's always focused on, you know, inflating our taxes, inflating, how much we're paying back. People are just trying to get ahead when they're getting in the property game. Okay.
sure.
I know people with 3, 4 investment properties that are just getting by. So it's very funny to me when I hear that. But when you say to me, hey, we've got to have multiple lenders, multiple portfolios, well, I think using a broker, especially a broker that's got the experience and the broker that's, used multiple lenders in the past, that is going to be your biggest asset because you can grow and you can accelerate your property portfolio quite quickly. And better than using a broker, or no, not better, same level, you've got to use the right buyer's agent, an ethical buyer's agent to make sure you acquire the right property that fits your profile. You don't want to go to someone that's going to sell you an apartment that's positively yielding if you're focused on growth.
Sure.
Do you agree?
100%. Yeah.
Yeah.
As a buyer's agent, property owner, and an investor, the way we look at your first home is very different. The way we would look at your investment property, and I agree 100%. We spend a lot of time doing cash flows for investors. So before we look at a specific property or location, I'll do a draft sort of forecast of the cash flow. How much is
Mhm.
that property paying us or costing us per week? Is that within your budget and affordability? And before we even look at property or get excited about the area or the type of property, we need to focus on the numbers. And is your priority? Yes, we do a lot of high cash flow properties, which are great for cash flow, and they're still achieving capital growth. But if you're solely focused on capital growth and not so concerned about the cash flow, which I had a client last week, more concerned about the capital growth component of the property. We helped her into an area that would offer a less cash flow but higher capital growth. That's something that I just mentioned actually. 2,700 growth in dollar value every week is insane. So yeah, a good that
That's
we're on the same page. And
But it's not only us being on the same page; it's us communicating to the public. Hey, you've
yeah,
you've got to understand what your needs are.
that's
You know,
right.
somebody that's in their 60s, okay, buying their first property, they might not be focused on capital growth, okay, because they might not be able to repay the debt if they retire in the next 5 years,
That's right.
okay. they might need something that's positive cash flow, or they might need something that they're eventually going to move into. They're downsizing. But somebody that's in their 20s, they're not married, they're young, they're, growing their career, they could take a little bit more risk. They might not have as many mouths to feed around and they've got more energy.
Yep.
I'm a new dad. I think we mentioned that earlier.
Yep. Well
I
done.
know for a
Congratulations.
fact, thank you. I know for a fact I've got less energy than what I did 5 years ago. you know?
Sure.
So it's now my priorities have changed. And when my priorities have changed, so does the property portfolio. The property portfolio, oh, you know what? Maybe I can't do something as risky this time, or I can't be focused too much on capital growth. I'm going to instead focus on this area here. They've got 5 to 6% rental yield. I'm not too sure. I'm just spitting numbers here right now, okay? Um, and my repayments are roughly $500 extra after I receive the rental income. Okay, that's good. I can afford that with my after-tax income. But a couple of years ago, when I didn't have an extra mouth to feed, my wife wasn't on maternity leave. I'd be like, all right, yeah, here's $1,500. Yeah, that's okay. I can afford that because I'm living at home with mum and dad, and mum's cooking me dinner every night. It's a different ballgame.
Yeah, totally.
Sorry, I get excited talking about property.
Yes, yes, we both do. That's one thing. Another thing we share in common: the passion, and energy, which is great for clients. It really helps them if we can keep working and find solution providers. That's our role to get them a good property in a good location with a good finance package,
Mhm.
and having someone that really cares and has also been through that experience, done it themselves. I think really helps. So,
Yeah.
I'd love to help one of your tips for, say, a first-home buyer that's been renting, just getting started in the employment ladder, and really want to get a loan approved and get on the property ladder. What are some tips you'd give them just to get them started, to give them some direction and some, targets or goals to sort of look towards, Joseph?
Generic advice only.
Yep,
If
definitely.
it's a regular, definitely, yeah. Always got to make sure. The first thing I would say is how important are the first home owners grant or the first home buyer schemes to you?
Right.
And the reason I like to mention this is because the amount that you could borrow as an investor, as opposed to an owner occupied property, far exceeds anything. Okay. Like it's like a $200,000, $300,000 difference, even if you're fresh out of uni and your salary is between $70 to $85,000. It could be astronomical. The second thing is when you use those different grants, what also happens is the government then monitors your property. So if I go use the first home guarantee, purchase with a 5% deposit, turn it into an investment property 12 months later, government's going to say, hey, where's our lender's mortgage insurance?
Sure.
Or if they go for stamp duty. So you really have the stamp duty waivers. They always want to make sure that people are doing the right thing if they're going to be using those schemes.
Of course.
So I'll ask them, are those things super important to you? Then I'll do the cash breakdown. I go, well, if you pay $30,000 in stamp duty as opposed to going for the waivers, but you can rent that property out for $650 a week, you're actually net positive 3 grand for a property that's valued more. And I'm not giving, actual financial advice like a financial planner. I'm just showing them the numbers.
Yep.
And by providing that sort of insight, people start making more conscious decisions. So the first thing I would ask them is, how important is it to you to avoid lender's mortgage insurance or stamp duty? The second thing I would ask is, are you comfortable with third-tier lenders? And let me go back to that. We have a lender on our panel that will allow for 40-year loan terms and
Wow.
monthly lender's mortgage insurance.
Wow. Monthly. What? Yeah, wow. That's a new.
So
Great.
one of my unicorn stories, it was actually one of the first loans I ever settled. Red brick apartment here in New South Wales. It hadn't grown in value at all, but they had paid down a lot of their loan. We accessed the equity from there, got them a 10% deposit, and they purchased a new owner-occupied property in Blacktown, New South Wales. I'm not sure if your listeners know where Blacktown is, but it's part of Sydney's West. It's one
Right.
of our fastest growing LGAs. And they were with me and they were like, are you sure about this monthly LMI? I'm like, yes, I know the lenders. They come to my office. They're a smaller lender. It's Resi Essentials and they're only on one panel.
Right.
And I go, yep, but they have this product and it's going to benefit you. And when you refinance, you're actually going to remove the remainder of the lender's mortgage insurance. So you might have only paid $4,000 as opposed to paying $30,000 upfront with another bank. So what ended up happening was they purchased the property for $1 million, and then 9 months later, it was worth $1.23 million.
Wow.
Refinanced them immediately, took them to Macquarie Bank, a tier one lender. Their interest rate dropped. They only had to pay $5,000 in lender's mortgage insurance total, as opposed to what the other banks were charging, which was $26,000 to $33,000.
Right.
And all of a sudden, we've got a client that was able to grow their property portfolio simply by having the discussion and listening to the professionals, as opposed to going out and doing it on their own. How many people do we know that know there's a monthly lender's mortgage insurance option out there? Not
Yeah.
many. Not
I'm in
many.
the industry.
Especially,
I didn't know that, Joseph. So great education.
I'll send you the deck.
Yeah, definitely. Yeah, that's really helpful. That's a great case study and just shows the value and your understanding of the lending options and how beneficial a good specialised finance specialist can really help our listeners, really build their property portfolio, get on to their first property. Had a very similar conversation with this young couple that I was talking about earlier about whether we should buy their own home as a first home and use the government grants, or buy as an investment property and don't receive the grants but get the benefits of all the tax benefits as well. So, and some sort of thing that actually, even on the cash flow, it actually worked out better buying it as an investment property, which they wouldn't have known that. Most people think getting started, we'll just get our own home, have a mortgage. But there's much smarter ways of doing that. That's where we can help educate our clients and give them choices and options and show them the facts and figures of how beneficial the right strategy is, that they may not necessarily be aware of. So that's a great, awesome story to hear, Joseph.
I'll send you over the lender brief after this, okay? It's one of my favorite lenders to use in these particular circumstances. Now, they're not for everyone.
Yep.
Not every case needs that. However, first home buyer, breaking into the market, investment portfolio, better yet, they'll let you buy with just a 5% deposit too.
That is an awesome lender. And just for the audience that aren't aware of stamp duty, when you're buying it as an investment property, the stamp duty is higher. So, and it generally has to be on top of your genuine savings. So it can be like, you mentioned, Joseph, it can be quite a substantial amount of cash to have to come up with. Not everyone has that surplus cash on top of the deposit,
100%. Not everybody can go knock on the door of the bank of mum and dad. Like, people don't have that access. That's question 3, though. Ask your parents if they can go guarantor. Sometimes you need it,
Yeah.
That question does come up in the conversation of the backbone. So I'm just going to have a drink, if that's okay.
Of course, yeah. So you mentioned, how we're going to help first-time buyers. So for the audience of just what Joseph just mentioned, there's things like parental guarantors, cash gifts, all those sort of things. So I'd encourage everyone to, if you're looking to get on the ladder, do whatever you do, ask as many questions as you can, have a good finance specialist. If you want to speak to Joseph, let me know. We can do an introduction, because this is gold information, mate, that you're sharing with us today, and I've learned a few facts and figures. You're welcome. It's I love it. It's really educational, and that's why policies and numbers are changing so rapidly, and the banks becoming more flexible, more open, different policies. That's exciting. It's really, honestly, it opens up people that didn't have borrowing capacity before. Suddenly we're helping buyers that may not have had options from a traditional large lender. Now you've given them a solution,
Think about it in another scenario. They will let you refinance up to that 95% and get the cash out, and then go buy another investment property with it and pay that monthly LMI.
Wow.
So if you're stuck at 80%, but that's a good investment down there, or you're at like 75 or something, and you're just short, pay the monthly LMI. Go take advantage of purchasing another property.
Right.
Okay, and then that way, guess what? In a year's time, okay, short-term pain, long-term gain. Okay, nothing great ever comes without a little bit of suffering. Okay, you might not be able to go and have, steak night 4 times a week or something like that, or you might not be able to go out and go get takeaway or Uber Eats. All right, that's fine. That's fine. In 5 years' time, you're going to be so happy you made that decision, because now you've got a property that's worth, well, in this market, possibly double now.
Yes, crazy it is.
Perfect example was the one that you gave before, 2,700 a week.
Yeah, you can't. Most people couldn't physically, say that. And that was a great idea that you just mentioned. I think it's important to refocus on that. You mentioned for first home buyers, We've got so many distractions now. Like if you are looking to get on the property ladder, I agree with all that topic that you mentioned. Save hard, don't get car loans and motorbike loans, jet ski loans. If you're looking to get on the property ladder, focus on that specific thing. Have a good conversation with your finance specialist. Find out what you need in terms of deposit, your borrowing capacity. As a case study, my first property was a one-bedroom house with my wife at the time, and interest rates were 20%. Unbelievable. You wouldn't have seen those times, Joseph. 20%.
20%. That would have been 93.
Yeah, and within 18 months, that property, that one bedroom on half a block of land, had gone up enough to get us the equity growth into a 3-bedroom house. We couldn't save that amount of deposit, but that's the opportunity we had to go without and sacrifice the property that we wanted to get on the ladder. And hey, 18 months later, we had a house. So that's a thing I think we need to always bear in mind if we're looking to get into property, whether it's our first investment property or our first owner-occupied home. Just be prepared to make a few sacrifices. Like you say, save everything, and it'll pay off in the long term, more than, hundreds of percent in the long term.
Can I add something on top of that? Just
Sure.
one more thing on top of that. Don't be scared of apartments either.
Yep.
I'm hearing a lot of people be scared of apartments. My first property was an apartment. It was a 3-bedroom, 2-bathroom, 2-car spot apartment south in Wollongong. I bought it off the plan as well. Another scary thing.
Yep.
I bought it for $410,000. I sold it. I wish I didn't, but I sold it 6 years later for $795,000.
Wow, it's huge.
That's a $385,000 profit. Now, what happens with the profit? I do get the capital gains tax on the profit. There is a little bit of a discount because I did hold the property for over 6 years. However, I still made my money and I still did quite well on it. And the property was positively geared for quite a long amount of time. I only had a $320,000 mortgage on it. And at one point I was charging $700 a week in rent.
Wow, that's a good return.
So what I'm trying to say is, hey, look for the proximity when it comes to apartments. I'm not telling you to go buy apartments in, the middle of Australia or somewhere like that. But if you have an apartment complex and the developer is offering discounts in order to be able to offload those, and it's in a position where there's not many other developments or there's not many other approvals going around, you might have a really good opportunity to capitalize on that capital growth. Sorry, I'm not even a buyer's agent and I'm saying these things. I'm sorry.
Don't
I just get excited.
Yeah, don't apologise, mate. That is honestly gold information. We have a lot of buyers and investors looking into the Brisbane market from Sydney or other parts of Australia and say, we only want to be in 40 minutes or 50 minutes of the Brisbane CBD. Well, the reality is even in Brisbane now, that price point has really jumped up. And whether it's your first home or your first investment property, even if you're buying further out than Brisbane, as long as the vacancy rates are low, the capital growth is strong, the infrastructure is there, you're still making very good money. It doesn't have to be a traditional house within 40 minutes of the CBD on a 700 square metre block. People are making money on apartments, townhouses, and smaller houses, freestanding houses on smaller blocks. It's more about the supply-demand ratio, which is we talked about earlier at the start of the podcast, that demand is much stronger in many parts of Australia than the supply. Just, I agree with you 100%, mate. Just get on the property ladder, do your research, due diligence, make sure the numbers stack up. The bank will do the evaluation, so you're protected that way. But more important to get started. But thank you, Joseph. It's been actually a really enjoyable podcast. I've learned some really valuable information that's going to help my clients, and we're going to share those clients in the future. So, mate, I do appreciate your time today. It's been the knowledge.
I'll send you the lender decks after this, mate. Don't worry about that.
100%. But thank you. I know you're very busy running your business and helping many clients, but this content today was truly beneficial, and I do thank you for your time.
Mate, a lot of compliments being thrown my way. I just wanted to say thank you so much for having me on. I know you are a busy person. I know you're an in-demand person. And let me tell you guys something about Geoff, okay? Geoff rescheduled this twice to have me on. He is such a lovely bloke. And if you are looking for a buyer's agent, if you are looking for someone professional, ethical, knows what they're doing, I highly recommend contacting Geoff and his team because they're going to be able to find the exact property that you need to fit your brief.
Thank you very much, mate. It's been an awesome content, and enjoy the rest of your day. And thank you very much.
Thank you. Thank you.
If you enjoy this podcast, please share the episode. We would love you to leave us a review. It really helps others to find the podcast and benefit from some pretty amazing content that we shared today, and some new banking policies that's really going to increase a lot of our borrowing capacities. Please remember to hit the subscribe button to keep up to date with the latest episodes. And if you'd like to make contact with Joseph or myself, our details will be in the show notes. See you next time.